So tomorrow, April 15th, tax filing deadline. If you've got yours done, that is fantastic. But what did you do with it? Did you take it? You throw it in a file cabinet? Although chances are most of the time you're not necessarily throwing it in a file cabinet anymore these days, right? It's stuck up on the cloud somewhere in digital form. But if you've done that and it's stuck in the cloud or stuck in the file cabinet, we would encourage you to pull it back out and take another look at it, because it really is a pretty good financial summary of what your income and what your overall financial picture looks like. So we want you to take a moment sometime, maybe not today, but in the next week, right? Maybe we can commit to the next week. Pull it out of the file cabinet, download it from the cloud, and take a look at it. And ask yourselves these questions. So, did I get a refund? Or did I owe money? And if I got a refund, was it a big refund? Was it a small refund? Should I be looking at changing things on that? And, you know, the biggest thing when you're getting a refund, that's not sort of extra money, right? That is your money that got withheld along the way, that ultimately you're now basically giving the government on an interest-free basis a little bit of a loan until tax time comes, and then you wind up ultimately getting that money back. Saw one example just this past tax season, working with them just this past week. It was a single mom, 2 kids, and she was getting a $13,000 refund. So that's great, but problem is, single mother, 2 kids. I mean, you know, life costs money, especially with a couple of kids. And if you think of that number, if I'm getting a $13,000 refund, well, my goodness, I could adjust my tax withholding and literally get an extra $1,000 a month in my paycheck, in my net paycheck, the amount that's actually getting deposited. I could get an extra $1,000 a month to really help with cash flow. So if you're getting a refund, if you're getting a sizable refund, those are the questions that you really want to ask, because at the end of the day, it's basically an interest-free loan to the government. Now, flip side, let's say you owe. Well, here's where you got to be careful, because the interest cost of that amount that you owe has certainly increased. It, in fact, has doubled from 4% to 8% over the course of the past 2 years. And so when you owe money, right, the reality is that you're supposed to pay that in along the way during the course of the calendar year. And when you don't, then the IRS can charge you interest. And so they do. And unfortunately, that interest rate, much like prevailing interest rates, has doubled over the course of the past couple of years. So the reality is that if you owe, you really want to start to take a look at where your tax withholding is coming from and what you can do to adjust it along the way. Now, if you're working, that's a W-4. Go back to that W-4 and take a look at what you're putting on that W-4 in terms of dependents, in terms of filing status, all of those kinds of things to really help to fix that. If you're taking Social Security, we see this all the time. A lot of people are under the misconception that Social Security is tax-free, and wow, that would be great if it was. It's really not. Its taxation depends on how much other income you have, but because those thresholds have not increased for 40, 50 years, more and more people are getting caught in what we refer to around the office as the Social Security tax trap. So because you have other income, then you're winding up having to include your Social Security up to a maximum of 85% of it as taxable income on your return. So if you owed and you're retired, are you maybe not withholding tax on Social Security, or maybe you need to withhold more, or for that matter, on your retirement distribution? So that should be the kind of the first question The other option, of course, if you don't want to change the withholding, is you can do quarterly payments, but that's often, people don't really like that. It's got odd dates. First one being, of course, that the first quarterly payment for 2024 or for the current year falls on April 15th when your taxes are due for the prior year. So that can really kind of be a bigger number, which is why paying the quarterly isn't probably as popular these days. And the reality is that it's at odd. It's not doesn't fall cleanly on a quarter. So it's April 15th, June 15th, September 15th, and then January 15th. So you can kind of see where those are a little odd dates. But you can automate it. If you're doing an automatic withdrawal to pay your taxes, you can also use that information to automate your quarterly payments. The reality is that if you owe, bottom line, okay, you want to make sure that you make those adjustments to be able to be ready for that for next year, because that interest rate and that interest charge has gotten higher. So I guess, go to the file cabinet, go to the cloud, download the return, take a look at it. Did you get a refund or did you owe? And also you can take a look if you owed money, were you charged interest because you didn't pay enough taxes last year? Another incentive to really get on this notion of, okay, we're going to ultimately do some additional tax withholding on some form of income, whether it's W-2, Social Security, retirement income, things like that. Next question you can ask yourself is, well, did I maximize out my retirement savings? Could I have contributed to an IRA? Could I have contributed to a Roth? Should I have done more with my employer 401k, 403b, or 457? All of that right there on the tax return. By the way, great way to use a refund, right? If you got a refund, then you can change your withholding and then use that money each and every month to maybe fund a 401k or an IRA or a Roth along the way. So good option to also look and see, did you maximize out your retirement savings? Another option for folks that are age 73 and above, right? You've got your required minimum distribution. But if you made donations to charity, did you take the time and do those qualified charitable distributions, right? Those are great ways to ultimately reduce down your taxes by giving that money directly from your IRA to the charity. That's how it's got to be done. You can't take the money and then write the check yourself. It's got to go direct in order to be a qualified charitable distribution. But the beauty of those is that it's a front page deduction, or basically when it comes to the income, you don't actually wind up having to put it in as income on your tax return. You put the little initials QCD on that particular line on the tax return, and ultimately that's how, even though you took money out of a taxable account because it went directly to charity, then you wind up not having to report it on the tax return as income for tax purposes. Social Security, another one to take a look at. Was Social Security fully taxable? Was it partially taxable? One of the things that we run into is if folks have their Social Security only sort of being partially taxable, and then something happens where they take out extra money or they wind up with extra money for a particular year, they can actually see their tax bill jump up dramatically because that extra income triggers additional tax on your on your Social Security. So that Social Security tax trap is one of those things that always kind of lurks out there and really does impact people. We see that on an all too regular basis. And then lastly, we think about dividends, we think about different types of investments, right? Dividends, long-term capital gains. Don't forget that those are taxed at much lower rates. And in fact, if your adjusted gross income as a married couple is less than about $120,000, you're going to have a 0% tax rate on those qualified dividends and long-term capital gains. So maybe that also means that you should be investing in a particular way in order to take advantage of that lower taxes. So those are just some of the things as we think about tomorrow, April 15th, being the tax filing deadline. Don't just take the return, throw it in the file cabinet, leave it stuck up in the cloud. Take a look at it, because ultimately it's a pretty good document to help guide your financial future so that you're making the best possible decisions with your money. Because after all, that's what the program is all about, right? Dollars and cents. We help you make sense out of all of life's decisions involving your We're a longtime radio show coming to you on a host of radio stations, but we're also a top 25 financial planning podcast as well. Make sure you check out our latest book, Next Gen Dollars and Cents, available on Amazon as well, where we talk a lot about the financial strategies that you need to succeed. My name, of course, is Joel Garris. I am a certified financial planner, certified financial fiduciary at Nelson Financial Planning, and we'll be back after these messages.